Dear students, welcome to this session on Accounting for Partnership Basic Concepts. The term partnership is very much familiar to you all, as you have learned partnership under the heading called forms of business like sole proprietorship, partnership, cooperative societies, joint stock companies, and so on in your first year business studies. By the end of this session, you will be able to understand nature of partnership, the Indian Partnership Act 1932, features of partnership, partnership deed and contents. Partnership. As the business expands, one needs more capital and large number of people to manage the business and share its risk. In such situation, people usually adopt the partnership form of organization. Accounting for partnership means when two or more persons join hands to set up a business and share its profits and losses, they are said to be in partnership. Two or more people who have a common understanding, who have decided to set up a business, who make an agreement to share the profit and losses, they are said to be in partnership. The Indian Partnership Act 1932, Section 4 defines partnership as the relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. From the definition, it is very clear that when two or more persons who have agreed to share the profits of a business, who come to an understanding, that is mutual understanding among the partners to carry on the business, here either one of the partner is active or all the partners being active and carrying on the business, or any of them acting for all. Persons who have entered into partnership with one another are individually called partners. So when you have more than two people who have decided to start up a partnership firm, the person's individual person is called as a partner and collectively called firm. The name under which the business is carried is called the firm's name. Some important features of partnership. First point, two or more persons. Now, in order to form a partnership, there should be at least two or more persons. So the minimum number for us is two and the maximum number. Okay. Suppose if it is a banking business, maximum number you can have is 10 partners, while in case of any other business, the maximum number of partners can be 20. But as per the Companies Act of 2013, you can have maximum number up to 100. But as per the new guidelines issued by the central government, the maximum number in Indian partnership is limited to 50. Second point, agreement. So partnership is the result of an agreement between two or more persons. So the agreement over here is to share the profit and losses. The agreement is the basis for the relationship, for the partnership form of business to come into existence. Agreement can be oral or written. In order to avoid disputes, it is better to have a written agreement. Third point, business. Agreement should be to carry on some business. For example, there are two partners, A and B. Both A and B want to purchase and sell a land for the purpose of making profit. They will be called partners, and what the act that they are doing turns out to be a business. Point number 4, mutual agency. The business of partnership concern may be carried on by all partners or any of them acting for all. This you have come across in the definition. So what does this tell us? First, every partner is entitled to participate in the conduct of the affairs of its business. Second, that there exists a relationship of mutual agency between all the partners. Let me try to simplify this for you. There are two important terms. First, the principal. Second, the agent. So when do you use the term principal? When partner carrying on the business, such a partner is called as the principal, and the rest of the partners are called as agents. For example, suppose A, B and C are partners. A meets a third party and makes business commitments. Here, A is called the principal. Partners B and C are called the agents, and they are bound by the act of the partner A because of the third party business commitments. It need not be that always A need to be the principal. It can be B can become the principal and A and C will become the agents. C can become the principal and A and B can become the agents. Point number 5, sharing of profits. Again, as per the Indian Partnership Act 1932, describes partnership as relation between people who have agreed to share the profits of a business. The sharing of loss is implied. So partnership is an agreement to do the business, at the same time to bear the risk of the business in terms of profit and losses. 6th point, liability of partnership. Each partner is liable jointly with all other partners and also severely to the third party for all the acts of the firm done while he is a partner. The liability of the partnership is unlimited. It implies that even his private assets can be used for paying off the firm's debts. Partnership deed. Partnership comes into existence as a result of agreement among the partners. Under the feature agreement, we have understood what exactly is an agreement, and I have described over there agreement can be either oral or written, I have also said that a written agreement is more beneficial in order to avoid any future disputes. The Partnership Act does not require that the agreement must be in writing. Nowhere it insists that we should have a written agreement. When the agreement is in writing, the document which contains terms of the agreement is called partnership deed. So, what is partnership deed? It is the agreement which is in writing. It is a document, and this document contains the terms of the agreement. Then we call it as a partnership deed. Contents of partnership deed. First point, name of the firm. Second, name and address of the partners. Third, nature and place of business. 4, duration of partnership. 5, date of commencement of partnership. 6, amount of capital contributed by each partners. 7, ratio in which profit and losses are to be shared. These are some highlights for you to understand on what exactly does a partnership deed contain. You can just observe the last point, that is the document which contains terms of agreement is called partnership deed, which contains terms of agreement. So here you can see what are the terms of agreement can be. Dear students, now you need to take up this test. First one, section dash of Indian Partnership Act 1932 defines partnership. Second, a partnership has no separate dash entity. Third, in order to form a partnership there should be at least dash persons. 4, partnership is the result of dash between two or more persons to do business and share its profits and losses. 5, it is preferred that partners have a dash agreement. This is in the form of MCQ, multiple choice question. You need to choose any one correct answer. A, partnership deed contains options: name of the firm, name and address of the partners, profit and loss sharing ratio, all of the above. B, the agreement between the partners should be in options: oral, written, oral or written, none of the above. C, in order to form a partnership there should be at least options: 1 person, 2 persons, 7 persons, none of the above. D, the business of the partnership concern may be carried on by options: all the partners, any of them acting for all the partners or any of them acting for all, none of the above. E, partnership that should be properly drafted and that as per the provisions of the options: Partnership Act, Stamp Act, Companies Act, none of the above. Thank you.